It's an account that helps you save money on your medical expenses by the following. Any money you contribute to the HSA, it reduces your taxable income up to the annual limits. This lowers your income taxes, and also for people who purchase insurance on the healthcare exchange, this increases your premium tax credit as well. The catch is that the only way to use the money in the HSA is to pay for, or importantly for this discussion, reimburse yourself for your medical expenses. Sorry. Oop, I am a little too finger happy here. So Salusion developed a different way of using your HSA, which is targeted to the needs of the 4 million customers on the marketplace who are currently not purchasing the lowest cost of healthcare. And let's walk through this and see what we mean by that. Okay, so we're going to review the insurance offered on the exchanges, the Affordable Care Act exchanges. At less than 200% of the federal poverty level, government support provides you with reduced cost healthcare. You should go with that support. However, once you hit 200% of the federal poverty level, the government specifically supports HSA eligible plans. And I'm going to walk through how that's the case. So we looked at each state on the exchange, compared all of the available plans across income levels and family size, and the HSA eligible plan was almost always offered the lowest cost of healthcare. Why is this? Well, HSA eligible plans include an inherent savings of 25 to 40% on the healthcare premiums. That's a huge deduction. Yet people don't choose these. Of the 5 million people eligible in the exchange, 4 million don't choose this lowest cost plan. Okay, so we're going to address that. So why don't they choose this? It's actually quite simple. To get the value of an HSA, you have to have a savings account. And in that savings account, you have to put in money, and thus you are putting money in ahead of time for your medical expenses. However, most people aren't savers. So since they don't put money in the savings account, they don't get the benefit of the HSA. No deposit equals no savings. So the HSA eligible plans are not what are most cost effective to them. However, we did something about this. We changed the way people use their HSA. With us, the consumer just pays for the medical expense however they want. Cash, check, credit card, doesn't matter. Just pay for it. Once you've paid for it, you're done with the payment side and just log the expense with us. Once you've done that, you're done, and we get you the tax savings. At the end of the year, we send you the IRS form that has your HSA contributions on it. Like, okay, so given what I said before about how an HSA works, how do we do this? Well, we take care of the required deposit and withdrawal for you. We provide you with a one-day interest-free loan, deposit the money in the HSA, which gets you the tax deduction, and the next day take it back out to repay the loan, which is a qualified medical expense. We're very excited about this opportunity. On the exchange, there are 5 million people who are above 200% of the federal poverty level, 4 million of which, as I mentioned before, do not buy the optimal health insurance. By making our HSA available to them, allowing them to buy the lowest cost of healthcare, at $35 a year, that's a $140 million opportunity. And for the future, we're already expanding this same offering to employers. How are we getting the word out to people? Our sales channel is through brokers. There are 50,000 brokers that sell healthcare on the exchange. We can get the list of all those because they all have to register on the exchange. We're reaching them through email marketing, following drip campaigns, and then we follow up personally with anyone who has an inquiry, of which we get quite a few. In our marketing and conversations, our value proposition to them, we emphasize 4 points. First off is customer savings. Our HSA is the only way to offer your customers the lowest cost of healthcare, period. However, we do more. We also will pay them a commission. We're offering them a calculator, which makes it very easy to compare healthcare plans. We're presenting the plans in a way that is much easier to compare and much easier for preparing reports for their customers. And finally, any inquiries we get about healthcare, we're going to refer to these brokers free of charge. However, this does leave us to our business challenge. We think this all sounds great. We received positive feedback. However, we still have to convince brokers to sell our product. And so what I'd love to ask for people's suggestions and help here is, how can we convince brokers? How can we get the word out to more of them and get them to offer and sell our product? I appreciate any suggestions you may offer. Thanks.
All right. Thank you for that, Giles. Do you have contact information that you want to share with folks? I didn't see that on there, so that they can get in touch with you afterwards.
Should be on. You have the you took control. Sorry.
Yeah.
It was on the first and last slide.
Okay.
Sorry, Giles at Salusion.com.
Okay. All right. Before we go to question and answer, I just want to share a brief procedure for that. So typically you would contact George. George isn't on the meeting today. He's up in the mountains. So you're going to ping me in the chat. Let me know that you have a question, and I will put you in queue. And then when it is your turn, or soon to be your turn, I will let you know that you're next. And if you can, go ahead and turn on your camera, turn on your microphone. And if you have a follow-up question, keep it brief. Keep in mind, everybody else needs an opportunity to ask a question. And if you want to, after we're done with the Q&A session, done with the meeting, we can go into more of a free flow conversation. So I'm going to go ahead and stop sharing and see if we have any questions here. Let's see. All right, we're going to go ahead and start with Terry.
Thanks, Dominic. Thanks, Giles. So Giles, I've got two questions, actually. One of the things that this depends upon is the correctness of the tax ruling, that when you make the withdrawal after the one-day interest-free loan, that qualifies as a tax deduction. As part of setting up your business, did you have somebody in a tax law firm or from a CPA firm vet that and give you some sort of a written ruling?
Absolutely. We ran all of this through a legal firm that specializes in, amongst other things, these sorts of questions. And they said, this is totally fine. If it totally fits within the guidelines of the HSA. And just one more little piece of information, when you read the ruling, for somebody who actually wants to go read it, the government is actually very specific about saying an HSA can be used to pay for or reimburse any prior medical expense. But most importantly, the lawyers have gone through that and totally said this is okay.
Perfect. That was really good. So then the next question I have is, I went through annual enrollment last year in order to get some supplemental and drug insurance because I hadn't had that before, and my broker didn't bring this possibility up. So I assume that for Medicare plans, this qualifies as well. Is that a correct statement, or did I miss something?
For Medicare plans for over 65, right. HSAs are not valid. They're for under 65 on regular plans. Okay. And it's for qualifying high deductible health plans.
Okay, got it. Okay, those are my questions for now. Thanks a lot.
You're welcome.
Thanks, Terry. Frank Pollock has a question.
Hi, Frank.
Hi, Giles. So I have a question and a follow-up. My question is, how many brokers have you tested this with, or run kind of a focus group, or gotten their feedback and had them try and put this in market?
So we've talked to about 20 brokers so far. And again, positive feedback. We just released our broker portal. So we're in the process of getting feedback. So, the positive, very positive, people like it, but we just rolled it out. So the actual experience is not, we don't have the track record there.
Okay. With any of the positive feedback, have you considered sharing that via the site? I was just on the homepage and I saw kind of the basic overview of the business model, but to more prominently, because this seems more consumer focused than broker focused. And if the brokers are your customer, then I would think you'd want to make sure that they were engaged and there was the right messaging to help them move forward in the process.
That's very good. That's very good. Yeah, I will actually humorously say we will have our broker page up tomorrow. So we were going there, but that's very good feedback. So you mentioned something there, the including broker feedback. Are you talking about things like testimonials, or do you have other suggestions of how to address that, or just making it more broker focused?
Well, I think I think definitely making it more broker focused. If they have a testimonial, if there's a statement where they say, hey, this is a great new revenue source for us, or, we pitched this to X number of our existing clients and they all, reacted really positively, or we're looking forward to capitalizing on this in January in the new enrollment season. I think that kind of third party or, industry validation is crucial when you're launching a new product, because
Okay.
as brokers, they'll want some type of vetting, and this is an immediate sign of credibility for them.
Okay, that's great. Thank you.
All right, Michelle has a question.
Hey, Giles.
Hi, Michelle.
So with the recent happenings with the Supreme Court and the pending court case in January, do you see that affecting your business model at all in terms of them somehow repealing ACA?
So if they repeal the Affordable Care Act, that part of the business model obviously will take a hit in some unknown way, right? Because you have these subsidized exchanges, the government, part of the benefit of the HSA plan is you get this premium tax credit. And as you use your HSA, it lowers your taxable income, which increases your premium tax credit. So the whole marketing dynamics of that obviously will be impacted. The model, the real model for us is this isn't just to the exchange. This is for anybody who has an HSA or anybody who has a high deductible health plan or is considering a high deductible health plan. So we talked about, we're targeting the exchange now because it seems like a really good way to get the word out, have an impact. Certainly, it seems like, it can make a huge financial difference to people. I assume people are pretty sensitive about that, especially now. So for us, it seems like a great first marketing avenue. But we are also marketing to companies, just period. And for companies, it gives them a couple of things. One, a way to encourage people to use HSA plans, which are cheaper for the companies to offer. And two, to the extent companies use them, they can capture additional tax savings because every dollar you put in an HSA decreases the tax the company has to pay. So that is the other avenue of how we're pursuing this. And then obviously in between, they're just individuals who are not on the exchange, but are still buying individual insurance. So because our HSA lets you deduct every medical expense, right? Just log it. You don't have to prepay. You don't have to remember your debit card. You don't have to file a form. Because it allows that, we see this, it's a benefit to everybody. Well, we know it's a benefit to everybody. This is our initial point.
All right, Eugene has a question. Welcome, Eugene.
Hi. So first of all, I've got about 20 years experience, both launching and working within the healthcare industry. And I was asked by some folks up in Philly to listen in on today's call. Sorry, I was a couple of minutes late.
No worries.
So first of all, you're going to loan money to people with no savings account. There's a process there that if people don't have a savings account, they're usually living paycheck to paycheck.
Yep.
And I am a bit concerned with the process of giving these people money because they've got, 20 bills that they're behind on. You give them money and you think it's for 24 hours and all of a sudden their bill is still not paid, but they paid some other bill. So that's a process question.
Right. Let me walk you through how that works. So when we give them the loan, we deposit the money directly into their HSA. And since they've set up the HSA through us, right, we control, and I have to be careful about that word, but we control the HSA. So they give it to us, we put it in the HSA, the next day we take it back out. So they're actually not controlling the cash. So I don't have to worry about giving it to them and say, hey, now that I've given you this money, will you please deposit in the HSA? And then tomorrow, hey, will you please withdraw it? We affect all of that ourselves.
Okay, I hope the law firm that you used was very involved in that. I ran a company about 15 years ago where a process company did something very similar. And in the first year, their taxes, everything was a mess. So I'll trust whichever firm you went to knows the detail of it.
Yeah.
You got caught in that.
So what you have to be careful about is that you cannot use the HSA as collateral on a loan, which is probably what got them in trouble. So we are very specific. That was in talking to the lawyers, that was something we spent a lot of time on. So we're not using the HSA as collateral on the loan. We have just given them a loan and they are signing to us the permission to withdraw the money out in one day. So they sign up front to do that. And so we can draw the money out and pay it back. So the legal reason you're talking about was very important for us to address, which we did by the nature of how we do this.
Okay, so the second thing, you talked a lot about brokers being your distribution channel. And what I have found a lot of, especially when, this was Medicare folks, but it's working for other folks as well, is the use of pharmacies. Pharmacies, amazingly enough, do a lot of running of healthcare costs and benefits for the people walking in. And if you can get pharmacy groups to buy into this, then shockingly, it's a much more direct method to the client than brokers. I'll be honest, about 10 years ago, I had a transplant and all of a sudden I had to deal with brokers in order to set up certain pieces of my healthcare. And every single one of them, however nice, terrified me. And I'm an educated person who knew what I was looking at. Most people have absolutely no idea how their healthcare works. So you might look at some other channels. Pharmacies is definitely one of them, especially the independent pharmacies, things like a Medicap, which has hundreds around the country or even thousands around the country. But you get a CVS, a Walgreens into this. It's a different channel, but it's a much more direct and cheaper channel. And then just hearing the amount that I heard, if you can go get some large companies to buy in, it's a much better channel. You have HR benefits type people explaining this. And if it's going to save the company money, companies will hire people to push it.
Right. Right. So when you suggest large companies, do you have any particular type, or are you just saying go find some company with 10,000 people and try and get them?
Well, 10,000 to me is not, well, I won't say large, but to me, Montgomery Watson Harza, which is an international engineering company that literally has people in every country and has horrible, Montgomery Watson Harza is similar to Halliburton, which I'm sure you've heard of.
Yep.
Those companies, this is a grand slam home run for those companies. Educated consumers, they travel a lot. They're never in their local territory when they get sick. General Electric lighting, Abbott would be a good example. Abbott's in Illinois, Florida, and a few other states. Those companies, you get one of them, you get 5 of them.
Okay. That's okay.
Thank you.
Terrific. That's great. That's great. Thank you.
Thank you, Eugene. Next, we have Bob.
Hi, Giles. These will be easy questions, but I remember when I was running my own business, I was looking at HSAs, and there were a lot of state laws that prohibited the use of HSAs, usually in states like New York that, want everything to give everything away for free. Are there any restrictions now that Obamacare is law of the land, or can some states rule out HSAs? And then my second question, kind of related to that, is your $35 fee, does that come out of the account, or does it have to be paid by the individual? Is there a rule that states that?
Right. So the first question, every state offers HSAs now. Certainly we've looked, yeah, every state offers HSAs. There are no rules against them, at least not that I'm aware of. And so there is not a problem there. And on the exchange, every state offers HSAs, and we actually went and looked on the exchange. And so you've got the healthcare.gov, which covers most of the states, and then various of the states have their own exchange. Like Connecticut, I know now has their own exchange. So we have to look at those as well. We've done that as well, and they all offer HSA plans. And outside of the exchanges, insurance companies offer HSA plans, as far as I know, everywhere. I've never heard of a state not offering them. So I think maybe the differences in timing from when you look to now is that they are much, much more common. And a lot more companies are trying to move to them. So let's step out of the exchange for a second and move to companies, which are often a big driver of what health insurance is offered. They're trying to move to them because they're cheaper, right? They're trying to save money, period. And so they're trying to push their employees to these. And in fact, what a lot of companies do, and some of you I'm sure probably even benefited from this, to get people to move to an HSA eligible plan, i.e. a high deductible health plan, i.e. something cheaper, is they'll actually put money in the HSA for you to help seed it so that you get used to using it and you see the benefits. Like, here, I'll give you $800 to help reduce the cost of your healthcare. So there's definitely a trend, and all the brokers we've spoken to, they're all like, yeah, they're getting to be more and more common, but the point is they are available everywhere.
Well, actually, you just brought up an interesting question. Is your HSA always, do you have algorithms that actually weigh what someone's out of pocket's going to be, so you kind of have a target as to how much money should be in that account? Because basically what Obamacare has done is basically created cash payers for the first $5,000 or $6,000.
Right.
And then, some insurance policy goes on after that.
Right.
So how do you address that?
Yeah, absolutely. So what we found with Obamacare is, yeah, you have a lot of plans with, for example, a $5,000 deductible, which means the first $5,000 comes out of your pocket. However, most people don't have $5,000 to put in an HSA, in the standard HSA, so people don't buy that plan. So even if that plan would be the cheapest, if you put the money in and you got the tax deduction and the premium tax credit, people don't buy it because they don't have the $5,000 up front, period, end of story. It makes it not worthwhile. With us, you don't have to put the money in up front. Every time you have an expense, you just log it with us. We create this one-day interest-free loan, put the money in, pull it back out, reimburse the expense, and you get the deduction. So zero pre-funding, complete deduction on everything. And now, so no matter how much you spend between 0 and 5,000, you get the tax deduction on that. Does that answer your question? I can talk about how we figure out how many costs people have.
Sort of. I just thought it would be worthwhile because I think the biggest challenge that most people have is out-of-pocket costs or surprise expenses.
Right.
So if you're helping thwart that, I think
Yes.
that's going to be an important, to Gene's point, that's going to be an important marketing tool in the whole scope of this thing.
Right.
And then the $35 fee that comes out of the account.
You pay that up front. You pay $35 up front. And yeah, so you just pay it up front and then that gives you the service. I mean, we're a regular HSA as well. So we do all the things a normal HSA does. You can still deposit money in, you can still invest it, et cetera. But our particular focus, our particular advantage is this ability to not require you to put deposits in ahead of time.
Got it. Okay.
Thank you.
Terry has another question.
Good deal. So I was kind of triggered by the question both that Michelle came up with and Frank came up with. First of all, in the context of when you redo your website to reflect kind of the brokerish aspect of it, one of the things that would be really useful to help those brokers would be to come up with an FAQ that has use cases on it. For example, here is a young couple, 27 years old, one kid, income level of X. This is the effective cost net of the HSA impact. This is the effective cost of their insurance because it's going to be a significant one, right?
Right.
Similarly, single person who's 31, who's 10 years into their career, who's an engineer at Cisco, whatever it is, so that you have different things that people can relate to fairly easily and go, have one of those holy shit moments, right? holy shit, you mean I get another 15% off as a result of, or whatever the number is, right? So I think that would help both the brokers as well as it would help the individual aspects where you're sort of selling direct, right? The other thing is, and going back to Michelle's comment about the Affordable Care Act potentially going away if a new Supreme Court justice makes it unconstitutional, the core of your business is not really affected by that. I mean, some of the gravy is, but that won't be clear to people. So one of the things that you should probably think about doing is proactively addressing that by being ready. In the event that that happens, you have the ability to put that out via newsletter or whatever your communications devices are. And then finally, as somebody, it might have been Bob, said with regards to HR people within large companies, no, I take it back, it was Eugene, right? There are HR organizations that run the annual process, right, for enrollment of insurance. And so the organization, the largest organization of HR people is SHRM. They have an active triangle chapter. I would get in front of them, speak to some of those people, volunteer to go and speak to that audience, because in essence, they're brokers too, right? And it might very well be that you might have, let's say, somebody from IBM, where this is not the largest presence of IBM employees in the world, but it's probably somewhere in the top 5 or 6 or 7. Similarly, this is probably one of the top 2 locations for Cisco. You know, so you could probably go through a listing. Triangle Business Journal has a listing of top kinds of companies in different industries, and go cherry pick out the largest ones, see if you can find somebody who's part of SHRM, and then talk to them about this as well, because it's now September, they're getting ready for annual enrollment, and so you probably have a 2-week window at the very most to be able to talk to somebody and have them pull you into their process. So that'd be a suggestion. Might have to wait for next year, but you don't want to forget the window and then miss out on it. Does that make sense?
Absolutely, absolutely. That's a great suggestion. Thank you. Terrific. That's terrific.
Bob has another suggestion.
Dominic, I haven't been on in a while, so I'm out of practice.
Hey, Bob. Long time no see.
It just dawned on me. We're talking all these, it talks about taxes. You know, if you sold this through a channel like an H&R Block or a Jackson Hewitt that serves the masses, I'm not talking about independent accountants or larger firms that,
Right.
you know, serve wealthier clientele. But based on the numbers you're talking about and the structure and the formal paperwork, those people are going to be more than familiar with that process and what boxes to check.
Right.
And they've got accounts set up. They've got a whole infrastructure that could probably, I mean, maybe they've got to stick a licensed broker in every office, but for them, that's a price of poker. And, you know, you potentially could have millions of customers. And a lot of those people are going to wait to the, you know, the final hour, you know,
Right.
So they're going to be under the gun to make a decision, and they'll guide them in that direction. And then they'll be set up for the next year. So that could potentially be one way to approach this. You're going to need some marketing dollars, BD dollars, but I think it's doable.
Okay, that's good. Thank you.
So Giles, I got a couple of questions that have to do with core business strategy. The first is the marketing strategy. What was the research behind the determination that brokers would be the primary distribution model for this? And are they a primary distribution model for one silo of business, or you know, are you looking at multiple distribution models?
So let's take that through stages. So as we looked at the Affordable Care Act as an option, you know, we studied the exchanges, we looked at the numbers, and we saw, like, wow, this could have a huge impact. This could have an impact now, you know, quote, low hanging fruit. Let's go after that. So then we did research, and we found that there's a government group that puts out a whole lot of statistics about health insurance on the Affordable Care Act, and that half of all health insurance bought on the exchange was bought through brokers. The other half was bought directly by someone like you or me going to healthcare.gov. Okay. So then we said, okay, we could either advertise to the masses, the 50% of healthcare.gov, or we can advertise to the brokers, and that seemed like a much more manageable set. And so that's why we chose to go to brokers first. So for the Affordable Care Act angle of what we're doing, brokers were the reason. From the bigger picture, when we looked across, okay, how do consumers buy health insurance? They buy through brokers. They buy from their company's HR department. So we have targeted them as well. And sometimes they just make decisions as individuals. So we have those three, and actually they do also have channel partners. Somebody had mentioned CVS as an example. That would be a channel partner, someone where they go to get advice from about various issues. You could also be people they pay their healthcare bills to. Right? There are companies that take payments. So we looked at those 4 areas. And so from the bigger perspective, we're targeting all 4 of those. Specifically for companies and brokers, it is a bit of a chicken and an egg problem. We go to brokers and we tell them, we talk to them about offering to companies, and they're like, that's great, but you know what? I'm not making a whole lot out of your HSA, and I don't want to risk screwing up my company relationship. So until I know this is no risk, I'm not interested, even if it's going to save the company money. And you go to the companies and they're like, that's great, but my broker has to recommend it. So we hit both. And we absolutely have to hit both. That's the only way to solve that problem. And in a few cases, we've done that. We've gone to the companies. They've called their broker and said, hey, this sounds interesting. Can you find out more about it? And all of a sudden, the broker starts paying a whole lot more attention to us. So yes, we do have to hit all of those channels. It's not just the broker channel. Again, back to how we're targeting right now, focusing on one thing is why we're doing the broker angle.
Okay, and how does this compete against HSAs that brokers are currently marketing, especially if it's a company that they're directly associated with? And how do you kind of wedge yourself in there?
In there. So the difference between us and other HSAs is purely the value proposition, which they will not match. Okay, maybe that's a slightly grandiose statement, but let's talk about why we see them as not wanting to match it. All HSAs today are offered by banks. And yes, we have a bank behind us as well, by the way. So we have all the same mechanics behind us as any other HSA. But all HSAs are offered by banks, and banks use HSAs as a way to grow deposits. It's just one more savings account for them to grow their deposits. So they're not interested to do this, put the money in, take it back out, get the deduction. They're interested in put the money in and, oh, by the way, don't spend it for as long as possible so they can earn the float on the money. So we are a fundamentally different business model from any other competitor, HSA competitor in the space. So not that we're not worried about that. Obviously, we have to be worried about it, but we see ourselves as something new and different. How do we then get our way in with brokers? And that goes back to the prior thing we were just talking about it. And our 4 points, we can try and convince them, well, it is a better offering, but to get them to offer to individuals, they're willing to do it because if they screw up one individual, they screw up one person's insurance, they're not making a fortune by offering insurance on the exchange. They screw up a company, they're not very happy. So we have to tackle this company versus broker problem that I mentioned a little bit, go after companies, talk to HR departments and companies, get them to talk to their brokers to pull the interest in. Just getting the brokers themselves to offer to companies is a pretty hard nut to crack.
Gotcha.
That answer your question?
Yeah. And going in another direction, just, always a consideration for any startup. What is what's your long-term vision, Giles? Do you have an exit strategy? What is it that you hope to accomplish with the business long-term?
So our focus now is creating a totally new health savings account company. We want to establish this to be as successful as possible. It will change the way people deal with health savings accounts. Once we've done that, so we're looking to build the company first. We're not looking to, like, for example, exit midstream and say, hey, this is a great idea, somebody pay me for the idea. We're fully dependent or intending to build it. The slides have the background on our team. Sean and I each have Wall Street backgrounds. I've run large technology organizations. Our CTO has been involved with a lot of startups. We have some engineers underneath us. We're intending to build this out. Once it's built as a real company, well then, okay, let's have that conversation. Obviously, that becomes a very viable conversation. But our goal is to build it up as a full-fledged company in and of itself, and then we'll worry about what the future is. We're not trying to sell midstream.
Awesome. Well, Giles, we appreciate it. We're going to go ahead and wrap up the question and answer session now and move on to community announcements. So same process as the Q&A. If you have any announcements or successes that you've had this week, or found any new community resources that you'd like to share with the group, please send me a message. Let me know that you have an announcement and I'll put you in the queue. First announcement that we have is Eugene does have something to say. Eugene?
Hi, folks. So as of this past Monday, I have taken over the Triangle chapter of Startup Grind. Sort of came to an end about a year ago, and I've been awarded the leadership of it starting hopefully in November. We're going to have a mess of fireside chats with venture capitalists that have invested in the area but do not live in the area, since our area is, well, we need money. We need real money down here. So that's the first part, but there will be panels of local startups and such. I posted my contact information earlier. If you are in a startup, if you have an interest in appearing at some point or being a part, then please reach out to me. I am in the ecosystem here, but it's a bit tougher during COVID when everything is virtual.
Okay. Thanks, Eugene. Nobody else is connected with me for an announcement. So I do have one. There is a pretty large in-person networking event coming up tomorrow. It is a networking luncheon that's being held at Sullivan's on Glenwood. They've been holding this monthly, and there's about 70 seats that are available. It's from 11:30 to 1:30 in the afternoon, and it's being hosted by Rockstar Connect. If anybody would be interested in attending, I can go ahead and put the contact information in the chat. Brett, do you have any announcements this week?
Yes, I do. Thanks, Dominic. It's today, celebrating 24 years of doing Brett's Open Mic tonight at Blue Note Grill. It's also a social event, started back in 1996. So we're doing limited seating inside, but we have seating outside. And it's just a lot of fun. So just like to have some of my Million Cups folks there.
And if you guys haven't been to Blue Note, awesome venue, and the barbecue is fantastic. So go check that out.
Thanks, Dominic.
Yeah, you're welcome. All right. Well, if we don't have any other announcements, I'll go ahead and wrap us up a little bit early. Giles, would you mind sticking around for a few minutes and doing a little bit more open conversation with folks who would like to stay? If you would like to continue speaking with Giles, he's going to stick around for a little bit. If not, we'll see you next Wednesday, 9 a.m. for 1 Million Cups. Have a good one.
Thank you, everybody. Thanks. I really appreciate it.